I've been investing in equity markets for almost 20 years. I've studied finance in 2 of the top 100 business schools in the world. My goal is to try and achieve financial freedom through passive income, and I'm here to take you on that journey with me. One of the most frequently asked questions that I get is, how does a foreigner invest in the Indian market? I'm here today to break that down for you, to discuss how to invest in Indian stocks, Indian ETFs, if one is not an Indian resident or an Indian passport holder. Since I value your time, I have chapters in this video that you can click and you can get to the most relevant portion of the video for yourself. If you haven't already done so, please hit that subscribe button. I'd appreciate it. It costs you nothing and it helps the channel. India is one of the fastest growing markets in the world. It's poised to become the 3rd largest economy very soon. The Nifty, the main benchmark index, or the S&P 500 of India, is growing at over 15% a year. And there's an opportunity for you to capitalize on it and to be a part of it. I'll be discussing ETFs and ETF strategies for India later on in the video. But first, let's get to stocks. For those of you who can invest in the US market, well, there's good news. Quite a few Indian companies are listed on the US exchanges in the form of an ADR. I'm going to put a full list of those companies in the description below. But there is one company out of them that I'm going to highlight that I really like, and that is HDFC Bank. HDFC Bank is the largest bank in India by market capitalization, and it's among the top 10 global banks when it also comes to market capitalization. Why do I like the bank? Well, it's grown over several years at 20 to 30% a year. The bank is very conservative in how it operates. And most importantly, the bank has a really good management, and the transfer of power from one management to the next has happened very, very smoothly just a few years back. So overall, I really do like this bank, and I think this bank is going to do very well going forward. And I think HDFC Bank's growth is synonymous with India's growth story. There are also some companies listed on the European markets, and I'm going to put a list of those companies as well in the description below. What's your favorite Indian company? Are you already investing in Indian companies? Please tell me about it. I'd like to hear that in the comments below. And if you haven't already done so, please smash that like button. Now, when it comes to ETFs, it really depends on where you live. If you live in the US, there are certain ETFs that you can invest in. With ETFs, size does make a difference, and I typically like to go with large ETFs because I like liquidity in my funds. So the largest ETF is the iShares MSCI India ETF. This ETF has over $10 billion in assets, and the ETF tracks the MSCI India index, and I believe this is a safe bet to go to if you believe in the India story. Now, if you're more into blue chips and you'd like to follow the Nifty 50, which is one of the main benchmark indexes in India, then I would recommend the INDY. That's an index I really like. That's an ETF I think that would do very well. The challenge with this ETF is the expense ratio is really high. It's 0.68%, so that's something to keep in mind. I believe, of course, this ETF will grow in size, and maybe perhaps because of that, the expense ratio may come down in the future. Now, for those of us living across the pond in the European Union, unfortunately, or fortunately, depending upon how you see it, some very smart individuals made some special rules for European Union residents. And because of that, well, we can only invest in UCITS ETFs or, European Union domiciled ETFs. So we have a much smaller choice to choose from. So when it comes to Nifty 50 ETFs, there really isn't one that I would be comfortable investing in. But when it comes to the MSCI India index, well, there is the iShares UCITS MSCI India ETF, which is almost 5 billion euros in size. And even though it has a high expense ratio, I think that's something worth considering. This ETF is an accumulating ETF. There are no dividends here, but you can always sell the units if you'd like to at some point. One thing important to note is the returns that are typically advertised in a lot of places are in Indian rupees, not in dollars, not in euros. So please keep that in mind, that currency fluctuation can impact your return either way, for better or for worse. Some of you may ask me, hey, what about mutual funds? To be very frank with you, mutual funds aren't something I get very excited about. So I'm not in a position really to recommend mutual funds when it comes to investing in India. So if this video has got you motivated about investing in India, well, once you finish watching this, you may want to consider starting to do your own research when it comes to investing. If you have any comments, please mention it below. I'd really appreciate it. Thanks, and see you again soon. Bye.